What is going on, Moon Gang? Today, let's have a quick chat about Tesla. Now, if you happen to be a Tesla investor, I have some great news for you. Tesla stock just received a massive price target upgrade from Goldman Sachs. In this video, I will be going over the details and reasoning for that upgrade, and then I will be doing a technical breakdown of the stock so we know what levels of support and resistance to watch as we get closer and closer to Tesla's inclusion into the S&P 500. Before I get into all that though, if you're new to the channel, don't forget to join the Moon Gang by hitting the subscribe button. I'm on my way to 10,000 subscribers, and your help with hitting that goal would be truly appreciated. And as always, if you enjoyed this video, don't forget to drop a like because it really helps with getting it in front of other people who may be interested. And now that I got that out of the way, let's get started. It was just reported that Goldman Sachs is now saying Tesla stock is worth $780 per share. Now, that's a pretty big number. Goldman Sachs analyst Mark Delaney took his price target on Tesla shares from $455 all the way up to $780, which was a very sizable increase of 71%. The $780 target price is the new high water mark on Wall Street. I actually don't think that's true because before Tesla went through its 5-for-1 stock split, ARK Invest was calling for $7,000, so when you take the stock split into account, that new price level would be $1,400, but they were also looking at the year 2024, so maybe that's why it's not being counted. Anyway, at this price level, that would put Tesla in the same league as Facebook. And obviously, with such a big increase, Delaney has changed his rating on Tesla from hold to buy. So what caused such a big change in heart in the analyst? The short answer is pretty much everything. Delaney sees electric vehicle share of new car sales around the globe increasing faster than he previously expected. He said, "We are raising our outlook for EV adoption and now expect EVs to comprise 18% of sales globally in 2030 and then jump another 11% in 2035. Next is the fact that falling battery costs and a proliferation of models available from many automakers will help EVs gain ground, which would obviously be a benefit to Tesla. And on top of that, Tesla's EVs are also becoming more profitable. Tesla produced a 9.2% operating profit margin in the third quarter, up about 5 percentage points year over year. Also, Tesla's margin is boosted by selling regulatory credits earned by making more than its fair share of zero-emission vehicles. I know that this last part is a little bit contentious, but the bottom line is that it is helping the business. And finally, Delaney also likes Tesla's vertical integration strategy. This was announced at Tesla's Battery Day event, and it's the concept that the company could design and create a superior battery for a cheaper cost. So, to sum this up, the EV sector looks like it's about to explode. The most expensive part of EVs are their battery, and those prices are falling. Tesla as a company is becoming more profitable, it's benefiting from the government, and on top of that, it's making its own technological advancements. Things seem pretty good to me. Personally, I really like Delaney's reasoning, and he's not alone. Analysts are warming up to Tesla stock despite its high valuation. We have heard this time and time again, how Tesla is overvalued, but when it comes down to it, the bears have lost more than $25 billion betting against the company. Now, 14 out of 39 analysts rate Tesla shares at a buy. Now, I fully understand that Tesla is not everyone's cup of tea. To each his own, and you should definitely invest in what you like. With that being said though, I do find the concept of betting against a stock with so much momentum to be a little bit insane. In all honesty, I think the volatility could pick up even more as we get closer and closer to Tesla being included in the S&P 500. As a quick reminder, last month, the S&P Dow Jones said it would add Tesla shares to the S&P 500 on Monday, December 21st, a move that could trigger a collective $73 million in new purchases from investment funds. Obviously, this is a very sizable shift, so I would highly recommend being prepared for large swings on both Friday, December 18th and Monday, the 21st. Now, let's check out the charts. The stock market managed to close the week out on a pretty positive note. Both the Dow and S&P 500 gained 0.8%, the Nasdaq 100 was up 0.4%, and when the dust settled on the day, Tesla gained 1%, which puts its stock at $599, which is within striking distance of its all-time high at $607. Over the past week, Tesla's up 1.7%. Over the past month, it's up 41%. And from the start of the year until right now, it is up 612%. This incredible performance is exactly why Elon Musk is now one of the richest people on this planet. If you've been keeping up to date with my technical analysis videos, you'll be familiar with the current situation, but if you're new to the channel, here's a quick recap. In August of this year, Tesla put in an impressive rally from 673 all the way up to 502, and a lot of this was because of the excitement surrounding the company's 5-for-1 stock split. Unfortunately, as soon as the stock split went through, Tesla sold off down to $330, and eventually this triangle was formed. This was then followed by a bullish breakout and a double top at 462, and then there was a sell-off as we went into November, and a new relative low was formed at $380. Then there was a small bounce and a fourth rejection in the region of resistance between 450 and 460, and eventually support was found just north of 400. Then the big announcement came. Tesla would be included in the S&P 500, and the stock shot from 407 all the way up to the moon. From the time of the announcement until right now, the stock has gained 47%. Clearly, Tesla stock has a lot of momentum, and I truly believe that this upward trend will continue, and once the stock gets above the only resistance, which is the all-time high just below $608, the sky is the limit. From a technical perspective, it's tough to call out areas of resistance above this price level because the chart hasn't developed in this region and it would enter into a phase of price discovery. With that being said though, I would recommend watching the key psychological levels of 650 and 700. If for whatever reason my bullish call is wrong, you should know that the closest support isn't actually that close. From the most recent close, we would be watching 541, which would be a drop of almost 10%. And if the bears manage to push Tesla stock below that, we would then be watching the recent high of 502, which would be a drop of 16%. Once again, you should definitely be aware of these levels of support, but I think it's much more likely that we see a new all-time high before the stock returns to 541. You should also be aware of what's going on in the RSI. As of now, there is no divergence, but if Tesla were to post a new all-time high and the RSI doesn't get above 80, that would be bearish divergence, which could be indicative of a future decline or consolidation, just something that you should be watching for. To get a better idea of what might happen in the immediate future, let's check out the 4-hour chart. Before I jump into this time frame, I want you to know that the name of the charting software that I use is TradingView, and if you're interested in it, there's a link to a free 30-day trial in the description of this video. If you sign up, it's a great way to support my efforts with this channel. Anyway, ever since the S&P 500 announcement, Tesla stock has been caught in this bear flag, and once the RSI got really overextended, there was a breakdown that found support at 541, and since then, the RSI has had an opportunity to cool off, and now it really looks like there's going to be a breakout to a new all-time high. I don't know how else to really say this, but everything about this chart is screaming bullish to me. That doesn't mean you should invest at the current levels though, because as I mentioned before, the closest support is pretty far away, which increases your risk, so if you do so, please proceed with caution. Personally, I am a long-term investor, and my philosophy is to buy shares at levels of support and then hold those shares for years to come. At the time that I'm making this video, I am invested in Tesla, and my cost basis is exactly $400. Even though I am up more than 50%, I'm not going to sell my shares because I truly believe that Tesla stock will be even higher years down the road. For a little bit of fun though, I did just make a short-term trade on Tesla by buying a call option. The strike price is $605 and the expiration date is December 11th, so in future videos I'll definitely make sure to let you know how that plays out. Moving forward, if you're not an investor and are more of a swing trader, I would recommend paying attention to these levels of support and resistance and watching for divergence in the RSI. As things continue to develop both fundamentally and technically with Tesla, I'll make sure to keep you updated in future videos, so make sure to have your notifications turned on. If you made it to this point in the video, you should know that I appreciate your time and I really hope that you were able to find some value in it. As a quick reminder though, everything expressed in this video are my own opinions and I am in no way a financial advisor, so I would definitely recommend that you do your own research. With that being said though, I would love to know your thoughts on Tesla in a comment below. Do you think that $780 is a fair price target? And what do you think will happen when the stock is included into the S&P 500? If you're new to trading, or if you're just looking for a new trading account, there's a link to the Webull trading platform in the description of this video. If you sign up and make a deposit of $100, you will be awarded 4 free stocks, so it's definitely worthwhile to check out. And as always, if you enjoyed this video, don't forget to drop a like, and if you haven't already, don't forget to join the Moon Gang by hitting the subscribe button. All of that engagement really helps me out. Thanks for watching, and until next time, best of luck in the markets.